Ladies and gentlemen, welcome back to the channel. Something strange happened this morning. We covered in the last video. AMC reported earnings in the morning. They were not supposed to. And we've seen what has happened to the stock. Let's go ahead and look at the stock at what's essentially happening right now with it. Go ahead and pull up AMC. AMC's up about 0.5%. Now, there is some things that are happening with the stock today that could explain some of this. And I do believe you get the earnings call today in after hours as well, as you typically would around 5:30 p.m. So let's get into this very strange situation. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So you can even see from the Nasdaq's website itself, right? It says AMC's earnings date. Earnings announcement for August 8th, 2023. It says AMC Entertainment Holdings Class A common stock is expected to report earnings on August 8th, 2023 after market close. After market close. Strange. Expecting a EPS forecast for the quarter is -5 cents. Now, AMC came in with 0. So we were expecting -5 cents for the loss. The loss was 0 cents per share. They broke even. But AMC actually swung to profitability during this latest quarter and produced net income of $8.6 million. Not a huge amount, but this is very positive. Now, what this means is AMC technically in the last quarter was able to support its business at the same time without kind of running through any more money. At the same time, AMC actually paid down about $42 million worth of debt through debt repurchases. So this was a real blowout quarter for AMC in post-COVID timeframes. You've never seen an earnings like this from AMC. This was a huge positive. Now, AMC has around $643 million in liquidity as they end the quarter, and they do stress that they need to be able to raise capital and remain agile are absolutely vital to maintaining a strong recovery trajectory. I think this is what's kind of stooping the markets today and drawing some questions, because this is a really strong kind of sentence. It says, there are real and potentially severe liquidity hurdles on the horizon that we will need to overcome. Now, what does that mean? Are they referencing their debt payments? Well, that would make some sense. Or are they referencing something else that is to come? Maybe something along the lines of a recession. Okay, so that is a strange line that's in here. I don't see any transcript of the earnings call or anything of that nature, so I believe it will be in after hours today around 5:30. So that's kind of what's going on with AMC. Really good earnings. We didn't get any update to where the courts are at. We didn't expect we would. So the stock moved big initially in the beginning of kind of the trading day here in pre-market. Once you instantly opened, you sold off. This has been the trend for many different stocks now, not just AMC, but AMC has a different level of manipulation, so that's obviously playing a role to what's happening with AMC stock today. AMC actually went negative at one point, but you did bounce right at about $5 per share, technically at $4.99 per share, but close enough we can call it $5 per share. That is a very encouraging sign. Now, before we get into any of the other raw data that is going on with AMC today, I want to talk about what's happening in the broader markets as well. So the biggest thing that is happening today is Moody's. Moody's has downgraded U.S. banks and warns of possible cuts to others. Now, Moody's cut the ratings of 10 banks by one notch and placed 6 banking giants, including Bank of New York Mellon, U.S. Bancorp, State Street, Truist Financial, on review for potential downgrades. Now, what really stands out to me, do you guys remember the banks that put up all of that capital to try to save First Republic? Right? Okay, well, the 4 banks, well, these 4 that are listed here, Bank of New York Mellon, U.S. Bancorp, State Street, and Truist Financial, they were all a part of the banks that lent First Republic $1 billion in uninsured deposits, as you can see right here. The remaining $5 billion would consist of $1 billion contributions from BNY Mellon, State Street, PNC Bank, Truist Bank, and US Bank. Strange. So it looks like the banking crisis might not be over. Now, what Moody's had to say is, quote, many banks' second quarter results showed growing profitability pressures that will reduce their ability to generate internal capital. This comes as a mild U.S. recession is on the horizon for early 2024, and asset quality looks set to decline with particular risks in some banks' commercial real estate portfolios. Moody's said elevated CRE exposures are a key risk due to high interest rates, declines in office demand as a result of remote work, and a reduction in the availability of CRE credit. The agency also changed its outlook to negative for 11 major lenders, including Capital One, Citizens Financial, and Fifth Third Bank Corporation. These are huge companies, guys. This is a major downgrade across the board from Moody's. This comes after Fitch downgraded the U.S. credit rating. This does not look good. Now, Moody's, it says, still Moody's cautions that banks with sizable unrealized losses that are not reflected in the regulatory capital ratios are vulnerable to a loss of confidence in the current high rate environment. Now, kind of warning that more banking crises could come potentially, but they also point out the unrealized losses. There's a lot of unrealized loss out there that are kind of being thrown under the rug by accounting practices, right? Banks have different kind of accounting practices. That's why some of these banks that have failed were so close to failing the whole time is because they nobody knew that a lot of their assets were actually liabilities, and that was a big problem. Now, it says the downgraded banks by Moody's include M&T Bank, Pinnacle Financial Partners, Prosperity Bank, and BOK Financial Corporation. So a couple others that did get downgraded as well. Now, some other data that came out today is also not encouraging as far as a global recession is concerned. Chinese exports suffer the worst fall since the start of the pandemic. 2023 was supposed to be the year of reopening, of great things for China. Exports fell 14.5%. Imports just fell 12.4%. You were seeing stronger numbers as China was locked down for COVID in 2021 and even 2020. Like, things are rapidly deteriorating over in China. And if you look, cars was actually positive by about 4%. Ships was positive by 1.1%. Mobile phones positive 0.2%. Petroleum 0.2% positive. LCD panels for like solar panels was positive 0.1%. Everything else was negative, starting with rare earth metals and going all the way down to computers being the worst, down 6.3% year over year. Steel down 4.5%. Shoes down 1.5%. Furniture down 1%. And then everything else is a little bit smaller, right? Down less than 1%. So this is very much not a good situation for the global economy. At the same time, we got news yesterday that Germany is potentially falling back into a recession as the car industry sputtles. The car industry is 5% of Germany's economy. Right here, 5% of Germany's economy. And is struggling to recover from the blow dealt by the pandemic and snarled supply chains. And we did see, let me see, industrial production in Europe's biggest economy, which is Germany, fell 1.5% in June compared with May, driven by a 3.5% drop in Germany's vast automotive sector. So some pretty worrisome numbers that you're seeing over here in Europe as well. Not to mention that UPS, they guided down, which is not what you want to see. Not a good sign for the economy that UPS just guided down. Now, they blame this on lowered outlook due to the volume impact from labor negotiations, which I'm sure some of that is true, but I'm sure some of it is just weakening of the kind of global economy, right? So some pretty bad things that are happening today as far as data is concerned. This is causing the NASDAQ to fall about 1% and the other indexes pretty similar to this. You have seen a pretty sharp recovery from the bottom of the day today, but the big problem is we're going to get CPI data on Thursday, and that's the big catalyst that will really move the markets from here. Right? Thursday's CPI report, you're expecting that at 8:30 in the morning. Your month-over-month and year-over-year readings are expected to remain the same as what we seen last month, besides your year-over-year headline inflation rate, which is expected to come in at 3.3%. Last month's reading was 3%. So you're expecting this to get a little bit worse, right, on a year-over-year basis. If this comes in over 3.5%, markets are in for a big problem. If this comes in 3.1% or lower, that's going to be good. 3.2% is okay, but I still think that gives you some degree of downside. So I think these are things that are at play today and are affecting AMC. Now, this article says AMC halves its half-year loss and anticipates an explosive third quarter thanks to Barbie. So AMC just posted a net profit for last quarter. Well, that's great. And July was the best revenue month for AMC in its entire history. So if Q2 was looking that good, well, Q3 might even look better according to AMC. This could mean an even larger profit. Now, profit or not, I don't think the $8.6 million of profit is a huge deal. It is, but it doesn't move the needle as far as AMC's debt, things of that nature. But what it does is it allows the AMC to kind of finance itself, to not need to go out and raise capital urgently, because AMC can still sell APE stock. They can still do that. But they're kind of waiting for the court. So if the courts kind of give them the runaround even more, they might say, hey, we're finally profitable. We'll just go ahead and go to the bond market again, or, find some other way to raise capital. That is always a possibility. That would probably be the best case scenario out of this court proceeding. That's ultimately going to be the next big thing that moves AMC. And in the earnings call that we're expecting to get later today, that could be the thing that really does kind of move AMC. Maybe the earnings call actually happened already. I did not see the earnings call. I could not find one. So I believe that's going to be here in after hours. Again, I could be wrong, but that's what it seems like to me. So let me know down below in the comment section if the earnings call is at 5:30 or not, because it's just weird. They kind of unscheduled, just let out the results today. Very strange. Now, short score of 93 on the day. About $800 million currently sold short in AMC. Estimated short interest off free float at 30.15%. Free float out on loan 37.6%. Shares out on loan 194.15 million. Days to cover 8.24. Cost to borrow 251.59%. Trailing 3-month average. And utilization at about 82 as well. This has recently fallen. I think that has a lot to do with the numbers getting picked up from Ortex with APE stock. Now, AMC stock still on the threshold securities list. Live short interest off free float at 30.26%. 156.22 million shares that are currently sold short. Cost bar average 364.29%. Cost bar max 380%. Cost bar minimum 334.65%. Interactive Brokers has cost bar fees of 244% currently for AMC. So I've said it before and I'll say it again. It's not just a one-day 1,000% cost bar fee that moves the needle for the shorts, right? It's when these cost bar fees stay in the hundreds of percent range for months or weeks, that's where things really start to hurt. And that's exactly what you have seen lately. Now, the option activity, a lot smaller than what we have seen recently. 37 orders totaling about $8 million with a positive order value of 1%. Yesterday, you've seen about $26 million worth of option activity. So today is a little bit smaller, and that's probably allowing AMC to move a little bit more here today. Although you are red, still a massive outperformance comparing the NASDAQ that is down about 1%. This is precisely what you would want to see. Now, we've talked about this before as well, but the FTD situation, that is still very, very bad. And if we go ahead and pull it up, tomorrow is actually going to be the biggest day of FTDs per the T+35 settlement time. You're going to reach 14.6 million running FTDs that could be closed out as soon as tomorrow. So that can also help to kind of keep the stock a little bit more elevated. I think that's partly what has happened recently, right? Now, option activity, you got about 45,000 calls currently in the money, about 44,000 puts in the money. So this is the first time in a long time the calls are actually outweighing the puts as far as the ones that are in the money. Out the money calls at 171,000. Out the money puts at 310,000. Now, I do expect a strong rest of this week. What we have seen recently with stocks that do report good earnings, you tend to rally the days following earnings. But again, Thursday CPI report is going to be massively important, and depending on what that is and how those numbers come out, that's ultimately what is going to kind of move the stock and move the markets the most, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.